Hey Scott, how's it going?
Yeah, good.
Good, good. Jamie, my partner, you out there?
Andy, I am here.
All
What is
right.
happening?
I was worried. You were awful quiet there the last 5 minutes. I thought, did I lose my partner? But I
I
see you
just have
made
all
it.
this data swirling around in my head, so the data kind of had me in its clutches, but I'm better now.
All right, all right. Well, thanks everybody for joining us for this afternoon, taking time out of your day, especially I know a lot of you guys are active traders and you put in a full workload trading. I know how that is. I did it for pretty much 16, 17 years. So to take time to come to a 1 hour webinar after all that, we greatly appreciate it, and we hope to share some insight and some knowledge and some cool stuff with you today. But just wanted to thank you for taking your time, and especially for those people out here that are kicking the tires and want to see what Trade Idea is all about. But before we do that, we do have to cover some issues, some legal issues, and that is to advise you that at Trade Ideas here, we are educators, we are trainers. This is for educational purposes only, okay? It's not to be construed as any type of investment advice. You might want to seek a RIA or a licensed broker if you're looking for that kind of advice. So anyway, but we do have some cool stuff that can definitely help you in navigating and trading the markets, and we're going to share some of that with you here today. But before we do, I want to tell you that we are so much more than just a trading software. Even though we're the best trading software, I should call it idea generation software. On the marketplace, we really pride ourselves on being the best at support, training, and education. We have 4 webinars a week in the same time slot, usually a combination of Jamie, Steve, or myself. We kind of flip-flop back and forth. One will host and the other one will sidekick. And then on Wednesday, we give you a special treat with Dan Merkin and Brad Williams. Dan Merkin is our CEO and Brad Williams our head tech officer. So that's a great place to come in on Wednesdays and ask your questions and get answers to all the questions. And we also encourage that here as well. I want to say I know we have a combination of people that's been using our product for a long time and a lot of people just seeing it for the first time. So guys, bear with us. We try to make both sides happy. We encourage questions from both sides. So if you're out there and you first time you see this software and you have a question, don't be shy. Just fire it away in the question panel there, and we'll get to it as soon as we can. But one thing I want to add, we don't stop here with our support and education. We have what's called one-on-one training here. And what that means is if you sign up, even if it's on the monthly program, and Scott's going to give you a little discount, actually a pretty decent discount at the end of this webinar here. And I just want you to know, along with that comes a free one-on-one hour of power training, we call it. This is an hour where you will spend with me, Jamie, or Steve, and we will build alerts with you. We will build layouts with you. We will discuss trading with you if you want to. We're all like very experienced professional traders, so you can obtain a lot of knowledge. I can't tell you how many people when they take that they just they can't believe how much they've improved just for that 1 hour. You know, especially with the software. It's just it can be a game changer as far as your knowledge goes. So be sure to sign up for that when you do subscribe to Trade Ideas. It is free and it's normally a $99 value. All right, let's go over the agenda for today. We're going to go over the market recap as we always do, and then we're going to dive into the Holly recap and let Jamie take over. Holly, kind of a little quiet today. Just the market, we've had a big move, had a couple of days of decent move, and now it's just kind of in a digestive period. I didn't see a whole lot of opportunity today, even in my alerts. I thought didn't see the normal opportunity that I normally see. So, but we'll still discuss Holly. There was one particular good trade in there. And then we're going to go a window that Jamie kind of built and shared with us several weeks ago, the compare count window, and I'm going to talk about a phenomenon I saw in there yesterday. Me and Jamie actually first brought it to my attention, and I've been noticing it more, and I kind of want to show you guys something. I think you're going to find this really interesting. It was, you know, kind of what happened yesterday as the SPYs were moving higher, and I was watching the compare count. And then this is an alert, you got to be kidding me. It's an alert that I actually built about 7 or 8 months ago. And I think I did share it in here, but I want to share it again because I know a lot of you people have been new, have joined since then, and it's kind of a fading an alert. Anyway, I'll save that and talk about it more when we get to it, and I'll talk about fading strategies, how to fade, some tips on fading. Anyway, it's a very consistent alert. I've been back testing it now for 7, 8 months, and it's been consistent. And you don't find that a lot of times when you build these alerts. You find a lot of inconsistency. You got to always stay on top of them. This one has been pretty consistent. So anyway, guys, let's dive into the market and let's talk a little bit about it before we move on. And what I will do is pull open the chart here. Let me make it a little bit bigger so everybody can see, and let's talk about the benchmark that everybody compares themselves to, and that is the spiders. We know what the Qs are doing. We'll look at that too. But with the spiders here, like I said, you've had a nice little breakout out of this wedge. This is an old trend line. I can actually get rid of that now if I want to, and I think I will. Well, it's getting quirky on me here, so I'll just do that later. But anyway, you can see the wedge right here, and what we've done, we popped out of it. Nice couple of days there, both of them gap ups. You didn't have this real long wick. That's an anomaly. That's not really there. You had a gap up in a doji and then another gap and go. And now the last couple of days, we tried to move higher, came back down, and then Steve and I often call this kind of a propeller. It almost looks like a propeller. Got a wick going that way. Now you got a wick going down. And boy, I tell you what, it's just set up. It's just being set up there for another move through highs. And I know that Amazon was trading pretty high up in after hours. So let me take a look at the spiders. Not too much in the spiders there, but boy, if I had to bet, if I was a betting man, I will say there's a good chance we're going to go test highs tomorrow. We'll see what happens, or the next couple of days. But once again, the leadership by far is in the Qs. Another new high today in the Qs. So after a couple of big moves, kind of an inside doji, not a really doji day, but an inside day yesterday, and then move out of that going into Amazon's earnings. So once again, kind of like back during the tech bubble. I don't want to call this a bubble, but I'm just saying it's very similar to what you saw back in the early 2000s with technology leading the way. And boy, after trading tomorrow, I think it's going to be that much more exaggerated with the charts. What about you, Jamie? Would you agree with that? Probably.
I concur, Doctor. We've been talking about this in the podcast, in the webinars, how the big caps have been leading, and that's the layer underneath that most people are looking at. So everything that we've been talking about in the past couple of weeks and what's been leading the pack, so to speak, this is the result, right? Of course, we don't like to predict, but, these observations have proven to be pretty valuable, especially in these last 2 to 3 trading days. I mean, we've had huge, well, depends on your definition of large, right? So that pack leaders list that I've been monitoring for a good month now, on a busy day before, there might be 4 or 5 guys on there at all-time highs and getting a little bit of action and some play up there. But now the list is 20, 30 companies every day, right? And you got some repeats in there, but, that tells us, hey, the SPY's not at highs yet. It doesn't matter because the Qs are pulling everything up. A lot of these companies are in manufacturing. They actually manufacture all the semiconductors. So, some pretty interesting correlations and, what kind of impact that might have moving forward. Having that information can be very useful.
It really can. It really can. And also remember that these ETFs like the Qs, they're weighted heavily. They're weighted heavily in the Apples, the Amazons, and Facebooks. As a matter of fact, I looked the other day, and I believe the top 6 stocks in the Qs, that being Apple, Facebook, Google, Amazon, and I can't remember exactly what maybe not Cisco. Anyway, I'm going to try to guess which the other 2 were, but they make up like 40% of the Qs. So you know, a lot of times if you're looking at your stocks and they're not running higher when the Qs are ripping, just remember it is a very weighted index, and so are the spiders and diamonds, only 30 stocks, but just keep that in mind. So I mean, you could actually have some serious underlying deterioration going on in the market, but as long as the core top 20, 25% of the stocks are moving higher, it's not going to reflect in these ETFs. All right, yeah, that just, so keep an eye on that with these. I know Steve mentioned the IWM the other day, and we'll take a look at them real quick because it finally has gotten out of that range, but not really impressive as far as moving higher yet. But it is out of this kind of the range that it's been in now for, geez, what, 4 or 5 months. So maybe one to watch as a sympathy play if the other ones get ripping. But that's about it, Jamie. If you don't have anything else to add, I mean, it's we're just kind of right back into that that bullish tape again. There's just no way around it. And
Well, and you know, looking at the last 3 days, Andy, it's like, okay, I got to find me a home. You know, maybe I'll build a base in this range right here. Of course, after we see what Amazon's doing after the market today, wouldn't surprise me at all to see a gap up tomorrow, right? And then maybe we're flirting with that all-time high by the close Friday, which would not surprise me.
Yep.
All week, you know, all I can tell you right now is with all the action that we've had, next week's going to be pretty interesting.
Yes, I think so. I think so. So that's about it for the market. But as he dives in, I'll let him go through this trade in Holly more in depth. But I did want to point this out today because I noticed that OCUL came out at 8:56. You can see it there on the entry time, on the wake-up call on Holly. And he will describe the trade that she made. But I was going to kind of show you here that I noticed about 5 minutes later, it started coming through my extreme high volume lows. So to me, when I see stuff like that, that's just, you know, when the odds are in my favor from Holly, and once again, I get double confirmation from an alert or something like that. Boy, it just gives me much more staying power, you know, in a trade like that. And you can see the risk on versus risk off. Of course, it didn't finish with this risk off. I think it did pull back because it ran into the resistance. But I'll let Jamie talk about that because there's actually not a whole lot to talk about with Holly today. So Jamie, if you want to take over the steering wheel there and
I got it.
drive a little bit.
Sir. You hit the nail on the head when you said Jamie will talk about the trade. And the trade. Now, don't get me wrong, she had more than one trade today. But when you look at, hold on 1 second, I can't find the page I need. Okay. So, you know, obviously this is the group of strategies that Holly showed up with here today. 8 strategies total, 5 longs, 3 shorts. You know, if we sort by the type, we can see obviously the shorts did not fire off anything today. Most of the trades were from Wake Up Call and Carpe. And we had on support with one who pretty much underperformed because it lost the one trade that it did issue. That's why we see a 0. This guy outperformed slightly. This guy underperformed slightly. So, you know, all the trades were long, nothing fired short. We had a total of 11 trades. And, you know, whether we look at Holly's risk on or risk off price index, which is basically, you know, how Holly's P&L has progressed through the day with all of her positions, this kind of tells the tale. All right. And also when we look at SPY here, I mean, talk about the back being broken today. I mean, here we go down the chute, climb up the staircase, and then take the elevator right down, bounce all the way down the lows, then not only a bounce off the bottom, but all the way up to new highs before giving half of that back. So in one viewpoint, you can say there was lots of opportunity. On the other one, you could say, well, you know, it's like the seesaw with razor blades on it. Now, you know, when this is happening in real time, not so hard to make sense of anything. And this is exactly what one would expect from a statistical model today. The noise was at all-time highs, and spiders 5-day or 5-minute intraday kind of clarifies that. But in real time, We don't know what's going to happen. But when we see the statistical model having a hard time getting profitable and staying there, that's telling us something. That is, in essence, a leading indicator, because in risk-off mode, we can see here slightly down, which is typical on the open. Reversion back up to flat, get into profitability, and then bam, once we get down there, we don't ever come back. So when you see the statistical model having a difficult time, that's telling us, okay, hey, there's always opportunity out there, but today it's not just going to be everywhere. So today I have to be more selective. And by the way, the market was also telling us that too, because if you're trying to play, say, one of the simple patterns like a range break, well, they were there today, but they were few and far between. You might have had to cycle through 40 symbols today before you found one, and then maybe you were catching it in time, maybe you were late, all right? So lots of noise out there, whether you're a robot or a human being. But getting back to the point here, when we see Holly struggling to get profitable, that tells us something. So risk on, same story, briefly positive, then whoosh. Risk on, briefly positive, then whoosh. So Holly was telling us something. She today was acting more or less as the canary in the coal mine. When that canary keels over, tells the miner something, you better get out because there's a leak. Well, today, Holly might not have keeled over, but she was a little disoriented, and the P&L graph dictates that. So that's something that we can take with us. Now, when we look at the trades down here, here are all of the trades, and if I sort by risk on, really the only one worth mentioning today is this guy right here, and that is the OCUL, which Andy was talking about earlier. And was it shortly after the Holly signal that you got your signal, Andy? And then you saw the
yes,
volume?
Yes, it was 5 minutes after the Holly signal. So
right, and this is something that we talk about all the time because number one, OCUL was from wake up call, so we know wake up call's got a 54% chance of working, just from a statistical standpoint. Now, we know the stat probability is with us right here at the 964 entry that Holly used, but then when you notice either sometimes it's emulating the chart pattern that you like, or the volume is extremely heavy. And that's what Andy was pointing out in his other window. Gets the call from Holly, shortly thereafter, boom, it pops through one of his favorite scans. So he's got statistical probability behind him, coupled with volume. So the more of these positive aspects we can stack up, the more confidence we have. A lot of the times it's meeting the chart pattern that we like to see, or it's not. But sometimes you can stack 3 of these things together, and that gives you a lot more confidence and just really assigns a higher probability to that thing doing what we think it's going to do. So of course we can see here, Holly gets into it, 964, boom, we're in the money. But as they quite often do, sometimes they go immediately, sometimes they'll regress back down through the signal line, as it did here. Now of course, the stop loss was never encroached upon, so that's what we have to focus on here. And of course, we're like, why did Holly lose 6 cents on the trade? That's because Holly is good at getting us in with signals, not so good on exiting, right? So reduce risk, that is a feature that Holly has. It's the sister to Profit Save, right? Profit Save was implemented so that the AI here would not let winning trades turn into a losing trade if it hadn't been stopped, or the time stop wasn't up, stop loss or profit target hadn't been hit, then there's an opportunity for a winner to turn into a loser. And that's what Profit Save does, is it keeps the AI from doing that. But she's not so good at exiting. It functions in that capacity, but she can't see charts like we do. So we have to really put a lot of stock in the stop losses here, and we can see that we got profitable, it came back through. So a lot of the times when they come back through here, whether you're in the trade already or not, if you see Holly red in a trade, down a few pennies but not stopped out, it's always a good idea to get into the habit of putting a price alert at that same entry price. So 964 here. So if I saw the trade regress here, I'd simply set a price alert for 964. Sometimes they go immediately. Sometimes they'll come back and forth through here multiple times. Set that price alert, whether you're going to add to the position or whether you're going to open it up for the first time, doesn't matter. That way you won't miss out on it. So we got push through, back through again, and then one more push through. And once you start seeing these type of footprints being laid down, this also gives me a lot of confidence because obviously there's a buyer, that's caused this action. Now buyers and sellers have become equal for a small bit in time. And this is a classic footprint of a buyer taking a break. But before too long, he comes back out again, and we get this. Now, when you see these nice little intraday consolidations, even though they're range bound, these can also act as very good times to add to a position. We get this little consolidation, then a penetration, and we can see that the volume was significant through that push two. And oh, by the way, now we're having a range break right up here. So even one other time to add to this position as the range is broken on high volumes. So once you get used to seeing this methodology, even though Holly made or lost 6 cents on this, depending on, did we just stay in 100? Did we scale into 200 or 300 by the time that this range break presented itself? Because if we did, all we have to worry about then is where are we going to exit, and we can handle that by just using some simple trade management rules, stop losses, trailing stops, things of that nature. Just like Holly doesn't let a winner turn into a loser, we also will not stay in business very long if we let that happen. So whether you get out for 3 pennies, 4 pennies on a half lot, or got out with a loss with Holly on a half lot, the bottom line is if you get used to it, okay, I'm going to do half with Holly and I'm going to keep half for risk on. That way in the end, you're taking something out of these trades that end up working.
And Jamie, if you don't mind, show them the daily on that too, because when I saw the trade, I'm looking at the daily and I'm saying, okay, I know where this is going. I mean, I don't know, but
and this gets a lot of new people a lot because we're in a trade, it's moving our way, Yahoo, right? We love it. Where do we get out? Well, I'd hate to get out for a quarter if it runs another 50 cents, or get out for a dime if it's going to run 40. Same old song and dance. So to temper our expectations, we look to the left on the daily. And as Andy was pointing out, when it was topping out at the highs up here on this wick, well, guess what? It was bumping up against these two guys over here to the left, all right? Now, of course, we have to make a decision. All right, well, I can see it's going to, it's bumping its head up here. Unless it really pushes through here with some massive volume, it might just be done for the day.
Mm-hmm. I mean, look at it, just went right there, right to a T there on that, going to those highs on those 2 wicks over there. That's why I always say, yeah, pay attention. Stocks have a tendency to fulfill their destinies, and when I see little areas like that, I try to hold on to at least some of it until it gets there, because it's really frustrating when you sell all of it too early and then you look at the daily and see the mission it was set out to complete. But,
right. Mm-hmm. So we always say we like to simplify things, and it really doesn't get any simpler than just looking to the left and trying to identify that resistance. And if you can draw some horizontal lines, which you can with our product, you're halfway there. So taking a look at the rest of the things that Holly produced today, yeah, this little guy worked. Not a huge move, or it just doesn't move in very large increments, but the move was still nice and clean and pure. But other than that, the statistical model is basically reflecting the high noise that we had today in the SPY. So to see her down a little bit, pretty much within expected parameters. In other words, the surfers were not out. There was one guy out there, trying to surf the 1 foot waves, and that is Holly, or one person, I should say, that is Holly. So that's pretty much it for Holly today. We'll see what happens tomorrow. All right, Andy.
All
What's
right.
next?
Well, yeah, if you just want to swing it back over here, and Leslie, I'm sorry if you if I led you astray on there. I actually didn't trade that one today. I did look at it, and I said to myself, well, I know where this one's going. Most of my trading now is in the variety of swing trading, just because I'm so busy with trade ideas. I don't. I did 16 years of avid day trading, and I just don't have the time nor the stamina anymore. But all right, let's see where we're going to go from here. I want to pull this up, and because
compare count real quick.
What's that?
Were you going to talk about that compare count?
I am. Did you want to? As a matter of fact, I'll probably let you actually
well,
talk
I wanted
more
you to talk
about how you set it up.
I wanted you to talk about your experience with it yesterday first, right? Your observations.
Absolutely.
And then I'll talk about my readings from it today on today's open. And then we can get into the, the inner workings of it, if that sounds good.
That sounds like a good plan. All right. Yeah, guys, if you got this from Jamie, and if you haven't, I'm sure he'll drop it in there for you, so you guys could have it. This is a compare count window that basically tracks the big cap movers, stocks over $5.4 billion market cap, and it basically just tracks the new highs versus the new lows. Obviously, the red being the lows and the green being the highs. So I was noticing yesterday that the market. Here's the market yesterday in the spiders. Okay, so this is yesterday's close, right around 238.50. The market opens up and just pretty much moves higher all day long. But I'm watching this compare count in the big cap, and I'm seeing like a 70% new lows to 30% new highs, and I'm going, wow, this is really strange. I mean, I am definitely aware that because of the weighting, you can still get an up move in the ETFs like spiders and Qs with the majority of them. But it's a pretty big majority selling off, with the market moving up like it is. So I was asking myself, I said, you know what, is this going to have any staying power? I'm curious to see how this closes, because all day now this got a little bit better, I'd say, but probably not over 68% was still for the lows of the day versus 32% for the highs. And I'm saying, I was just real curious, because this is kind of new to me. I've only been kind of using it since Jamie kind of introduced us to it a couple of weeks ago. So lo and behold, I'm sitting here watching all day, and sure enough, this is the close we had yesterday. Basically the market just last 45 minutes just rips down to lows. So it's something for you guys to keep an eye on. So, keep an eye on, because if you don't see that compare count window really kind of giving you some support on what you're seeing in the overall market, just be a little wary of it because of the move, and vice versa. Man, I think Jamie is going to talk about what he saw today when the market was at lows, and it can kind of tip the hand a lot of time in the other direction. So. But that was very interesting, because I kept an eye on that all day, and I said to myself, I'd be real surprised if we rip through highs seeing this compare count like it has been all day. And sure enough, we sold off and closed on lows. And Jamie, you were going to mention what you saw today.
Yeah, let me flip it around here one more time.
Mm-hmm. No problem.
Okay, so as Andy was, describing that scenario unfolding, here is what the same compare count window looked like today, and this is after the first 20 minutes of trading. So this is telling me that there's 57% selling versus 43% buying. Now, I've been watching these types of windows for a very long time, and anything significant, 55-45 one way or the other is, it's kind of up in the air at that point. But when you start, not saying that it still won't be accurate, but when you start getting above 55%, from my experience, that's when I really take notice. All right. And so today we had, in the opening 20 minutes, a lot more what you might call institutional selling versus institutional buying. Now let's talk about that just for a second. Institutional selling, institutional buying. Well, before the market ever opens up, the guys that run the market, they know if there's going to be a big buyer, big seller in a company. These are millions of shares typically. So when there is institutional action in the stock, it's not uncommon for that stock to end up trading 2 times, 3 times, or even higher the amount of shares in that session that it normally does. Now, a large portion, a large chunk of that volume is going to get done in the opening 20 minutes. That's just the way the market functions. That's the nature of the open. And anybody that tries to trade the open can tell you, you can get flattened like a steamroller, or you can come out smiling, depending on what you're doing and if you're right or if you're wrong. But it's not for novices, right? It'd be like trying to ski down a double black diamond on your first day trying to learn how to ski. It wouldn't be very advisable. You're not going to end up well, right? So a large portion of that institutional order is going to get done in the opening 20 minutes, but then they have to back it off and try to, parse it out a little at a time, because they can't just impact the market significantly. That's the whole game of the institutions. And if you're a trader for an institution and you get people out way below the VWAP, well, you're probably not going to have a job for very long. VWAP is simply the value weighted average price. So there's a whole game at play here. So that big chunk of institutional selling above 55% today is a footprint in the sand. It's a tell. It's like at the poker table. You know the guy's got a good hand because every time he does, he scratches his nose. Well, this is the institutions scratching their nose. More institutional selling in the opening 20 minutes. That means they have big pieces that they're going to have to get out for the remainder of the day. So let's keep in mind, this was the reading 20 minutes in. So let me just expand my 5-minute chart here. 5, 10, 15, 20. So right here is where the compare count reading takes place. Or excuse me, I meant to do an arrow there. Right here. So I'm thinking to myself, okay, well, there's no guarantees, but the fact that there was a lot of institutional selling, larger than normal, and then of course we perked up to here, and then that's when the elevator comes into play, and we take that leg down, a little bounce, and then bottom out here. So once again, this acts today as a leading indicator. Not because it's some crazy advanced technology, it's just simply keeping count. But guess what? Where else can you tell your system, hey, only these things that are doing this particular thing, keep account for me. Everybody knows what the tick is on the NYC, which is just simple advancers versus decliners. That's the broad markets. That's chaos, all right? These are big cap companies with institutional selling. So, it's simple, it's powerful, but it takes some getting used to. So I'll make sure that I drop this in the chat area so that people that do not have it can add it to their layouts and just start observing it. And a lot of the times you'll see 45.55, 49.51, and you'll know, okay, well, it's going to be a harder day to gauge, what direction we might take. But when you start seeing readings after the first 20 minutes, over 55% one way or the other, start taking note. Now, having described that, when you have a compare count window open, and let's say you went through the same scenario that I just described, and you're like, wow, this thing, it kind of tipped, it scratched its nose. The guy scratched his nose. I mean, he had a winning hand. I placed the bet, and of course, look what happened. Now, when we get down here, and then we see this wick put in, and you're thinking to yourself, are we going to bounce? Well, what do we do first? We look to the left. Then we can see as we were wicking down here, we were trying to snuggle up against here, which looks like what might be a new range forming for the SPY. That might be one good indicator. But if I took that compare count window at that exact time, and I said, of course I don't have one up, but the same thing would be true. Right-click duplicate. The fresh compare count would start new. So if we cranked up a new one, and then all of a sudden we see it just spike to 80% green, 90% green or higher, that is also affirmation that a bounce is in place. So the compare count window, if you have not been using it lately, start using it. And I'll make sure that I drop it into the chat panel here in just a second. So Andy, that's my little sermon on the compare count window and how it can be made useful. But just keep in mind, everyone, this is for the big cap because I think that's where it's the most applicable for trying to get an edge on market direction. But you're only limited by your imagination. So whether it's small caps, stocks under $10, or anything that you can think of, you can make a compare count for it.
Good stuff, Jamie. Yeah. So if you want to pass it over to me, and did I lose you?
I was talking to you, Andy, but I didn't realize I was muted.
Oh, okay. All right, guys. So anyway, I'm about to show you this alert called "You Got to Be Kidding Me." But before I do, it's a fading strategy, and I want to give you some tips on trade because it could be a very dangerous, strategy because you're going against the momentum, you're going against the grain. So there's some tips I want to just kind of share with you when you are using a fading strategy. And a lot of them are just common sense, but you'd be surprised how many traders lose their common sense when they start hitting buttons. So tips for fading. Okay, first of all, be patient. Okay, remember, seller. In this case, this is a long strategy, so I'm gonna pretend and talk as if we are using a fading strategy going long a stock that's oversold. So be patient and get your price. In other words, the stock is coming down. Don't be in a hurry to rush out, and buy. Be patient. Maybe look for some signs of capitulation, or even better yet, maybe look for a turning point. Trade with small size because usually when a stock's in selling off like the one I'm about to show you, it's very volatile. So you don't need to trade huge size because you're going to, if you do get your up move, there's going to be plenty of bounce back for you to make a decent profit. So you want to cut down your size. Look for areas of support. If you're fading going long, shorting, look for areas of resistance. So you want to look for areas of support where it may find a place and dig in. Whether it be, it could be a trend line or it could be just regular support, and I'll give you some examples here in a minute. Yeah, always watch the chart and look for an area where you might think you get a bounce. When you're wrong, okay, remember, you're going against some momentum, and if the momentum is going to continue against you, you should get out quickly. Don't second guess. You just got to write it off and just say, okay, I'd like the risk and reward opportunity in this situation, but if I'm wrong, I'm out. I guess just get out. And just the opposite, when you're right, remember, you're taking a lot of risk buying a stock against the momentum. So you need to be rewarded hugely for that. So when you're right, you want to really be right and let them work for you. Don't be in a hurry to get out. If you want to scalp something for 10 cents or something like that, hey, go play a momentum stock and just ride that wave. But if you're going against the grain, you want to definitely, if you have the audacity to jump in and buy the stock against the grain, you want to be right and let it work for you on the way up. All right. So with that said, let me back out of this and pull over my alert here. And this is called. Oh gosh, I got too much stuff here going on. Just a mess here. All right, so this is called "You Got to Be Kidding Me." And keep in mind that I wrote this for Holly. This is for our AI strategy. So I have to get a lot of data points for Holly. You can't give her a sample size of 100 trades because she is going to take it and break it down and run so many optimizations and back test on it. So you need to give her a nice sample size to work with. But that doesn't mean we can't take a strategy that is, ourselves, that is not made for Holly and actually work with it, and get it to fit our style and optimize it and reduce it to where it's spitting out less symbols, less alerts, and use it to trade with. So just a real quick, what I was looking for, I always start in my head, okay, when I'm thinking about, an alert. So when I started building this, I said to myself, you know what, I'm looking for something that's really kind of overdone and sold off, but I don't want something that's just on a death march. So my first thing, I want 2 consecutive down days already coming into the day. So I want 2 consecutive days of downward momentum. In other words, 2 red candles. And then on the third day, I want it to at least be down 4%, maybe even 5%. I will judge that when I get in here. But I'm looking for something that is already down coming into the day and just kind of overreacting and getting killed and potentially for a bounce. Now I've already done my optimizing on this. It would just, I didn't want to spend today doing optimization back testing. I will show you, we will do a back test and hopefully everything will run smooth here. But just kind of show you the configuration. And you're going to see a lot of filters in here because I've already optimized it. And I use a new low filtered. The difference between a new low filtered and a new low is going to give you a print or I'm sorry, an alert every penny it hits a new low. Whereas a new low filtered, it's exactly what it says. It's filtered. You're only going to get it about every 5 to 12, 15 cents, depending on how quick it's moving and the volume it's doing. So it's just kind of filtered to take out a lot of the noise, so you're not seeing a constant stream of one symbol going over and over, hitting every penny. All right, and the window-specific filters here, I'm not going to go over a lot of them because, once again, they're just optimized, and I will kind of show you briefly the optimization. But for the most part, I'm looking for price between $2 and $75. I'm looking for stocks that are, like I said, a change from the close. I have a -4 in the max column. By putting that in the max column, it's saying I don't want to see anything unless the stock is down 4% on the day. The close being the prior day's close. This EPS 0.01, we've gone over this before, -1, that's just a way to filter out all the ETFs. So in other words, something has to report earnings to show in this alert window. Today's range, this is just me optimizing using my filter set. Same thing there. There's the consecutive days. I'm looking for 2 days in a row down coming into the day. Distance from BBOP. Now I did back test this earlier in case it's real slow. It should be okay, but let's take a look here. So let's go ahead and back test this. So what I'm doing is we are going to back test every trade for the last last 64 days. So basically over 3 calendar months worth of back testing. And I've been doing this for like 8 months and I've been getting pretty much the same results. Timed exit. We're going to hold this trade for 60 minutes. Okay, risk management is 2% on the downside, and I don't have a profit target. I'm just looking to hold the trade, until the timed exit. All right, so we're going to advance. It's where you set your filter sets. I'm not going to get too deep into that because the idea here is not to show you back testing. I want to share with you an alert where I think those of you who like to use a fading strategy could really potentially use this and profit in the marketplace. So what our system is doing now is going back and running a test over the last 64 days on every alert that came through this this window and back testing to see what the profits, basically what the profits were, what the winning percentage was, the profit factor. Computes, it's really cool. Computes a lot of things, and I'm hoping it doesn't get too slow on us. Because if it does, I'm ready for it because I got it already done down here. And it is. So what I'm going to do is pull up right here the back to it. It's going to make it, Jamie?
It's trying.
Yeah, I think it is. Kind of just when I was about to give up on her, she kind of sped up there.
This is where Andy sings some songs for us.
Yeah, really. Of course, it's going to slow down right at the end.
Hey, by the way, while we're waiting for that calculation to finish, Andy, I just dropped Alpha Predator Stalking into the chat window too because it produced MTBC today at $1.29 about 25 minutes into the market.
Nice. Nice. Yeah, I'm sure they appreciate that. I actually need to grab that one. I haven't grabbed that one yet. All right, we're almost there. And the other one, don't worry, I'll just pull it up because I have another one to show you if you want to break it down. And guys, this is the same. I have not done anything to this thing in 8 months, and it's been testing like this. Now, you may be looking at it and say, wow, a total of 1,740 trades. What good is that to me? Well, there's a way, I'm going to show you a way to take this and break it down to where you can even optimize it more and make it beneficial to you if you want to use with your trading style.
Quick, just to give everybody a nice visual, click on that daily tab and just look at the days of profitability versus days. I mean, that's where you want to be. I mean, there's a lot more green than red to be had there, and that's a nice visual right there.
Exactly. Yes. Yes, thank you, Jamie, for throwing that out. Okay, so here's a summary. You basically got a profit factor of 195, which is pretty good. You know, anything about 1.5, over 1.5 is good. The winning percentage, close to 54%. That's not bad. I mean, obviously, you like the higher, the better. Average winner versus loser is really good. You got 16 cents on the losing side. You got 25 cents on the winning side. So basically what this is showing you here, if you had an account of 50,000, well, you quite wouldn't have enough buying power, but let's pretend you had your starting equity was more. But you can see the curve there. Now I'm not factoring any slippage because honestly, I think you can get a better price because remember, the stocks are heading lower. But nonetheless, it's boy, that's a Holly would just. I think Holly's going to love this, and that's why I'm going to present. I'm presenting her currently to Holly to try to see if we can get it into our AI. She's going to love this because she has a huge sample size, so she can take what I did and run it through every single filter that we have, and even you know optimize this more. I ran it through about 5 or 6. She'll run it through. Gosh, how many, Jamie? 100 or 50?
You know, you
so
just
anyway,
never can tell. You never can tell how many times you're going to run it through the mill. And by the way, I was just responding to a question by I think it's well, I don't want to. Carlin and was asking if you could share the strategy. I'm like, well, it's a little big to try for a human to try to keep up because what's the back test? 30, 40 trading days and 1,740 trades coming through there. So you wouldn't be able to really use this version effectively. Now, when we give it to Holly, she creates a manageable version of it. Therein lies the value of the AI because she can take this data set that already looks beautiful, but there's too many trades, so she can shrink the trade count down and make the strategy even more profitable. So I hope that answers the question.
Yeah. Well, I tell you what I do. I'm going to do a breakdown version, and I will share that one with you because I'm going to show you what you can do. I'm sorry?
I said even better.
Yeah. I mean, it'll still have a lot of trades, but I think you'll be able to find it. So let's take this and let's optimize it further because, like I said, I pulled this up, and I haven't touched this thing in probably 8 months, and it's still very effective. So, but I was kind of going through and I was trying to figure out a way to optimize this even more. I mean, price, everything looks good there. Nothing I really want to do there. Time of day, yeah, pretty consistent. Don't care for that winning percentage right there, but you know, it's pretty consistent. So I go over to my other filters and I'm thinking, what filter will affect this the most? And I already know because I know I put 4% in here as change from the close. So I want to go and find that filter and see if I can optimize this further on change from the close. So I go to my other filters I click on change from the close. It's an interval of $2 right, or 2% right now, so I'm going to break that down to 1% intervals. And what I see here is I know I can take out all this stuff over 13. So what I'm going to do is right click and I'm going to set the minimum change. So in other words, it cannot be any more than 13% off from yesterday's close. So there you go. It's putting in 13%. I'm going to click OK. And then I'm going to see if there's anything on the downside that I can do to it. So I look here and I'm saying, okay, 4 to 5%. There's only 2 trades at 4%, so I'm just going to not even pay attention to that. But from 4% to 5% down, a lot of trades, 463 trades at 53%. Not bad, but a 1.56 profit factor. Nothing like what I'm seeing right here, right above it at 5% and 6%. So I'm going to take this right here and eliminate all these trades right here as well. So, no, I'm sorry, right there. So let me do this and make that the max. And click OK. OK. So what I'm going to do now is do it, and I'm going to pull over this one because I did it with this one. I'm going to make sure I did everything right, and I will show you again. And if it goes slow again, I'll just go and pull this up. And, I already have it back tested. Let's hope it goes pretty quick here because we're running out of time. So really all I changed there is the percentage from close. I put the max at -5% now, and I changed the min to 13%, so nothing more than 13%. And luckily it's running faster for us. Now there's still going to be a lot of trades in here, and I was planning today maybe going over and showing you how you can potentially trade each trade. I may still have enough time to do that, but let's see if we can get this thing even optimized better. And there you go. We've made great strides. So now we have taken it from basically almost cut the trades in half. It's down to 979. Remember, this is over a 3-month period, so you're probably only looking at, oh gosh, I don't know how many trades a day that is. I want to break it down. But it's not going to be so many that you can't look at it with the naked eye and see some pretty decent trades coming through. So once again, average loser 16, the average winner 27. I think that spread got a little bit better. Profit factor now is 2.24. This is a great way. If I was doing some automated trading, I'd probably want this in my repertoire, in my arsenal, I should say. So anyway, real quickly, let's just take a look today. See if I have time here, and let's look at some of the stocks that came through, and maybe I haven't even done this. I kind of just wanted to do this to show you what you may look for when you're seeing these things. And what I'm always looking for, this is what I'm talking about, finding areas of support. So this is one that came through earlier, around 6:30, okay, this GNCA. What I'm doing when I see this, I'm saying, okay, great, this thing is sold off recently at a multi-month high. Now it's selling off hard. But if I see it right here, first thing I'm doing is looking over here and asking myself, where might this bounce? And look at that area of support right there. You have a wick down right here. That's the kind of stuff you want to look for. So I wouldn't probably be interested until this hit that level. Now I did come down and hit this level and finally got a bounce. Unfortunately, it was near the close of the day, so not much there. That's one you may want to watch tomorrow. Let me see. This one is kind of in no man's land. Does have a little bit of support here, but unfortunately, guys, I don't have time to really break each trade down and look for ones that really worked. But I'm going to let you guys have this so you can do it yourself. And this is fresh. Was a little bit thin this morning, but that was a good entry right below the 5, and then bounced back up for some action there. I wish I had more time to go through some more days on here, but I don't. But what I'm going to do, guys, is go ahead and save this one that I save and share. This is a second one that I did that's going to have the kind of the revised, so you guys can take a look at it. And trust me, I've been looking at this for a while. You can really find some good entries if it's your thing. If you do like playing, fading strategies, it can be very effective. Okay, let's call this. Now, unfortunately, I saved it in history. Let me fix this for you real quick. It's not going to be labeled, guys, but it's the last one that's coming through the chat window right now. So there it is for you. It can be some good stuff, and I'm hoping we'll get this in the Holly AI to even make it better for you guys, make it easier for you guys. But you can play around with it, and actually it's a good experiment for you guys to take it and see if you can even optimize it more. I know a couple of guys out there who will probably do that, but with all that said, I think we're running out of time now. It's time to bring in Scott and let him go over the final through a few items here and talk about, what you, little discount for you.
Yeah, thanks. Thanks, Andy and Jamie. We do have, if you're an interactive brokerage client, you're going to want to check out the newest beta and connect it to see, just to see how it works with the Brokerage Plus interface. Brokerage Plus lets you automate your trading from trade ideas through your interactive brokerage account. And so the best thing to do if you'd like to try it out is get that new beta, open the Brokerage Plus module, and if you have questions about it, there's a great instructional video in the YouTube channel. Just go ahead to the YouTube channel and search for Brokerage Plus or Interactive Brokerage, and that'll show right up. If you have any questions about it, email us, email support info@trade-ideas.com. I'd like to get your feedback on it, and it's free if you're a premium member to use for now. So it's the best time to get on board because we'll be grandfathering it in when we decide to start charging for it after it comes out of beta. So if you get into it now, it'll be free for you as long as you're a Trade Ideas user. However, if you decide to wait, then you'll pay over $1,000 for access. So if you are using interactive brokerage, it's worth checking out just to know if you can make use of it with your trading style or not. It's really cool. We also have a podcast that we've been letting people know about for the past few months, and it is just called the Trade Ideas Podcast, and it's easy to find. If you search for Trade Ideas Podcast in your favorite app that you use to listen to podcasts with, you'd be able to find it and subscribe. Listen to last Fridays. We have a new one coming out tomorrow. It'll come out a little bit after the market closes. And it's always interesting, always a good time. Usually it's hosted by Dan Merkin, but we do change that up sometimes. And a frequent guest is Jamie Hodge. Steve's been on there. Barry's been on there. We've had outside guests as well. Check it out. There's a code for you to save a little bit. So if you use the new code that we have up there, it's May Holly, all caps, and that'll take 15% off your first month or year of Trade Ideas. Remember that even Standard comes with a full hour of one-on-one training, so that makes the starting out at Standard tier an outstanding value. However, that code is huge savings off that $18.88 a year premium membership. So if you already understand how Trade Ideas can really revolutionize your capturing of alpha, your trading, then you should go ahead and lock up that grid price. Any questions, email us info@trade-ideas.com. You can follow Jamie at QuantBot on Twitter. Steve Gomez is at Today Trader, and Dan Merkin is Trade Ideas 1. Looking forward to seeing you in next week's webinars. Thanks, Andy and Jamie. Have a good one.
Sorry about that, Scott.
Thanks a bunch, guys. Thanks, everybody, for popping in. Andy, we'll see you tomorrow. Scott, same to you.
Yep.
All right. Thanks, everybody.
Later, y'all.